Hi, everyone. Thanks for coming. It's always good to see some people coming out at this time when I know the market is a bit slow, even on days like today. Even more refreshing to see people out here. As my title is, as my presentation is titled, on our show, the Corlin Economics Report, we try to not focus too much on individual markets, but we do have very much a resource focus because I think it's a good idea. Always a prudent investor needs to be looking at what's going on elsewhere in the world in terms of major markets because that impacts us at all. So already this year we have seen some pretty significant breakouts in other markets, which is further just keeping people distracted from our sector and from a number of other sectors. First of all, looking at interest rates. If anybody is following the 2-year or the 10-year, safe assets right now the yields are going up. The 10-year today, this is a chart that I actually posted at my presentation back in January. Now we move forward. Even today, it's a perfect example that the 10-year has just broken out to levels that it hasn't touched since back in 2011. So a 7-year high. This means that there are trend followers. There are investors that are paying more attention to what is going on in yields, which means that, they're getting better return for their money. This is making money more expensive. This is making money harder to get access to. People are demanding higher and higher yields for what are considered the safest investments in the world. So this uptrend in the 10-year does need to be focused on because this controls a large amount of money flow and other investors' psychologies. Here are some Libor rates. If anybody follows Libor rates, it's the interbank lending or offering rate offered out of London. This, since it goes back to about 2 years, this has more than tripled in its how much it costs to keep money at these banks, these lending rates. This is meaning that, again, money is less liquid right now. So it's harder to flow into some of the other sectors. And again, resource sector, unfortunately, is relatively unloved right now. All of this does also relate to, let's say, the precious metals. When we have rising interest rates, this puts a general cap on metals prices. When you hear people say metals prices can run up during rising interest rates, that is true, but you will never see them scream higher. There always needs to be a disconnect between interest rates and inflation. Inflation is also moving up, which is good for the metals, but interest rates are also moving up. This is, again, putting a cap on where we can move to the upside for a lot of resources, especially precious metals. Here we go, though. Interest rates and inflation. Interest rates, still, they are starting to move up. They are starting to rebound from this extraordinarily low level. Inflation is also starting to rebound from this extraordinarily low level. What I just want to point out here is that there is still some room for interest rates and inflation to move up together because of the fact that they're both at really historic levels, especially when you put them in tandem. So I do believe, and on our show through many of our conversations, that we do think that inflation will gradually tick up, but interest rates are also going to continue to tick up, mostly because the environment around interest rates in terms of this uptrend is now in place. A lot of this has to do with central banks, but this is a whole nother discussion, unfortunately. Looking at, again, the US dollar. The US dollar has broken down 2 times to multi-year lows in the last year. Relating this to the resources, gold was unable to make any significant highs during those 2 breakdowns. This all plays into a cap on the overall metals price, which is an issue, but is still a sustainable market because of how the market has moved recently. The US dollar, though, it broke down over 15% decline in under 2 years. This is a significant move in the currency markets. The currency markets are the largest markets in the world. When you see these type of breakdowns, that further enhances or entices traders to move into a sector like this. Right now, though, as you see on this chart, I have a couple question marks that say, is the dollar going to continue to move up, or is it going to break down this is still very much a question mark. And I think this is the most important market to be watching over the next 6 months to a year, is if the dollar is able to recover back up to even the higher part of its range, near 100, that's going to wreak havoc on a lot of other markets, especially small caps, especially emerging markets. But if the dollar breaks down from here, this drives home the fact that we are in a higher inflationary environment. This is very important from a global trading perspective, which, tying it back to resources, are global markets. US dollar, this is now taking a look at the big picture. I have a guest on our show, David Vincent. He's a technical analyst that focuses on commodities. He also focuses on the US dollar. He talks about these super cycles. When you have these large markets, they do move in long-term cycles. Right now, looking at David's chart, what he projects is a generally lower dollar. So there is room for a bit of a bounce here, but over the next approximately 7 to 8 years, we will, or he thinks we should continue to see a general sell-off in the US dollar. This is very encouraging. I think this does make a lot of sense to me too when you look at the inflation metrics and when you look at general sentiment in the dollar. The dollar has room to move down, and it very well could during the next 7 years. It won't be a straight line down, but a general choppiness downwards would be encouraging. And that ties back to that last chart where let's see where the dollar goes in the next 1 year. That's going to tell a big story. Moving on, oil, another breakout sector. So this is the third breakout sector that I am presenting here. This has all happened just the first part of this year. Oil has broken out to now a 3-year high. And if anybody's a technical analyst, you can see there is a lot of what is called air above this chart for this stock to run, or well, for oil to run. But think about all the factors that are driving oil. There's a lot going on just in terms of utilizing what oil we have above ground. The U.S. continues to be able to take on new rigs, build their rig count. But just last week, we had some geopolitical announcements, or I guess we can call them economic announcements from President Trump that has now again thrown a big question mark in this sector. To me, I think oil is another one that needs to be watched, but it's not out of the question for oil to continue to rise. Tying that back to our sector, oil is a huge input cost for a lot of producers. So energy consumption at mines is massive. Higher oil price brings down some of their margins. We all hear of marginal deposits. Stay away from those right now, because if oil continues to run, they're only going to look more and more marginal. Pay also close attention to the costs that are being used in some of the PEAs and PFSs that we are going to be seeing very soon. We'll get into that later. Oil, again, international market. We're talking about huge markets that are breaking out. People are following them because, quite frankly, that's much more interesting than what we've seen here. And this is GDX. So we have a year and a half where we've been in under a 22% range. That is, I think, historic in terms of lack of volatility. We have volume that is back down at lows back in the tail end of 2015, at the bottom again. The fact of the matter is, if you want to talk to somebody optimistic, they'll say, look at how well gold and these stocks hold up look at how well these stocks hold up when gold moves down. An example of it is today, gold is breaking below 1,300. GDX is actually just maintaining kind of in the middle to lower part of its range. So yes, they're resilient on the downside. Unfortunately, on the upside, we see no higher highs, not even close to where we reached in 2016. It just means that this market, it's a range-bound trade right now. And we need to see a lot more things happen in other markets around the world before we can truly start to think that the gold equities are truly going to run. That being said, there are still people here. There is still investment. We are still seeing companies that are cashed up, companies that have stories. They're developing their stories. They might not be getting a buy now, but if you want to take that contrarian investor look at it, again, this is a sector that seems like it's put in a bottom now back in 2015 at the tail end of 2016. This is still a constructive chart. It's just a boring chart. And that's just what we're dealing with gold equities. That being said, another aspect of this market that sometimes looking at GDX doesn't truly present to you is I have a chart of Goldcorp here. Goldcorp, you take a look at this is almost a 20-year chart, that we could have only bought Goldcorp in the last 2 or 3 years at this price, and then the whole way back at 2005. You actually look at their financial results, they've cleaned up their balance sheet. They've cleaned up their income statement. Their financials are much stronger. They're building large cash positions, and they are starting to make small deals. We haven't seen any big deals. We're unfortunately still seeing this small portion of equity raise in terms of 20% stakes in some of these explorers. Again, that is encouraging. Look at some of these big guys. The big stocks, when we do start to see big money come into the sector, which we just don't have right now, they're the ones that move first because those are quite frankly the easiest stocks for the big investors to get into. I talk to a lot of generalist investors on our show, and I always ask them, what do you think of the metals? And it's been pretty consistent. They're boring. Like they're just boring, so we're not paying attention to them right now. Say, okay, well, what do you need? What needs to happen here? Some sort of a major breakout. We need gold, we need silver, we need something breakout and sustain some sort of a breakout. Look back to last month when we had silver break above 17 and then immediately pull back, and everyone got excited at that. That wasn't a move at all. So we need something to actually happen in this sector to drive more of the generalist money in and watch the majors. They're going to tell you that first. In terms of selecting stocks for a portfolio, you have to be very selective. I know it sounds, I'm sure you hear this all the time. Management, always look at management, perfect. This says past success, at least one. Make sure they've sold a company or actually built one. It's very easy to do that these days. Go on, follow. There are many websites that show you all the companies. Do your due diligence and check on those companies and see what's happened. That can be a very glaring kind of sign of if management will actually be able to get you out of the stock. Ability to raise money. Companies are raising money right now. We're seeing oversubscribed financings. We're just not seeing many of them. And we're seeing financings get issued and them not be able to raise that money. So the market is telling you where the interest is. There just isn't any buying coming out of the general market. It's all money being put directly to the companies. Skin in the game, just go to the management info circ. You can get that on CDAR. Look at how many shares the insiders hold. Look at what they pay themselves. Just take a recap of if you feel comfortable with that, because sometimes, again, that can be very glaring. If you're seeing X amount of money go into the ground and the same amount of the money get paid to the president, probably best to avoid that. That money's not going anywhere. Defined projects, as I said, there's a number of projects still advancing. There's been a lot of old mines taken over recently. I'm sure we've seen this trend of old mines, and they're saying that they're profitable. There's still a large question mark if a lot of these are going to work. There was a reason why they were shut down. Everyone will tell you because gold was trading at X $100. You need to relook at what was taken out of there, and that's why the market continues for these guys to wait until they produce a resource and any sort of economics around it, because no one's really proved this out yet, at least recently. And exploration upside. There's companies doing 100,000 meters of drilling, and they're not getting any credit for it, and they're cashed up to do it. To me, I'd rather take what is, a bit of a flyer on what are stocks out here. I'd rather do that with a company that's cashed up and has a pretty aggressive strategy. So that's one aspect that I always look at. And liquidity, make sure you can get out of the stock if you need to. Some of these stocks just don't trade. How to maximize your returns. Essentially, don't be all in right now. I hope that I've shown you enough that so many other markets are doing so many other things that this is not the market to be all in right now. Have a couple stocks that you're not going to be looking at for 6 months or longer, because it's going to take time for these stories to develop and money just isn't flowing in. You do want some exposure, but look at other places right now to have some of your money. That's the best thing I can say as of now. Stick to the stocks you know. Don't start getting distracted by some crazy stories. They're not getting huge buys right now. Don't be distracted by pictures and press releases. Wait for the actual numbers to come out. You have time. Don't feel like there's ever a panic to get into any of these stocks. I know a few of them do run, but the worst thing you want to do is try to chase those. what to sell, what to buy. I think you should always be trying to sell some stocks or looking at maybe what has run a little bit. It's worked really well over the last 2 years because you've played a range-bound trade, but sometimes you can just ride them for too long. And I say consider having stop losses. Nowadays, because it's traded so thinly, that can be dangerous because of how only a few $1,000s can actually move the stock. So make sure you manage those or just don't even have them right now until there is more liquidity. Some of the stocks that I like, again, look at the majors. The majors, Goldcorp at $17 a share. You should probably have some of Goldcorp or Newmont. Newmont's run though, so or Agnico. Any of those. We had a guest on the show who titled them the Bang stocks. So Barrick, Agnico, Newmont, and Goldcorp. And those, maybe have a little portfolio of that because those are going to move first. Osisko Metals, that's a base metals play that they have 100,000 meters of drilling going on. They're backed by the Osisko Group. It's the Osisko Group in the metals space. It might take some time for that stock to get running, but they already have two pretty major, actually very major past mining camps. Revival Gold, that's another takeover of an old mine. I think that they have stuff going on. The market right now is waiting for a PEA to come out. That's going to be out shortly, and that's going to tell a story, but that's actually a driving event. Skeena, they continue to drill good holes. This year's huge for them because they are trying to copy what is the twin zone at the Snip mine. They don't know what's going to happen. They seem confident about it. They've had some good results out of their more infill drilling. This year's going to tell a story, but they are going to be drilling. So to me, and they have money in the bank. So again, something to consider. Maple Gold, they just drilled in Quebec just over 150 meters of over 1 gram, 1.25 grams, I believe. Got no credit from the market about it. That's a pretty good drill result. Let's see if they can follow up on that. But hey, at least that's going. And Dolly Varden, I think that company will probably be sold by the end of this year and next year, hopefully. They have a good resource, silver in the Golden Triangle. Check it out. I hope you all enjoyed that. I hope you all have a great time at this conference. If you have any questions, I'll be walking around. I'm always available through our website, kereport.com. People email me all the time. I try to get back to them. Please email me with any questions you have. Feel free to stop me anywhere with any questions you have. Thank you, guys.